Hi, this is Drew with Daniels Ag Services with your morning report. Markets finished up mixed yesterday. You had corn and wheat higher on the day while beans were lower. All currently higher to get the day started so far this morning. Beans were taken for a wild ride yesterday. We're up around 20 at one point, down around 20 at one point, and ended up finishing lower on the trading session. As we noted yesterday, soybean meal is being penciled in as far as price-wise to be shipped into the Delta, the southeastern part of the United States. Well, we got some rumors that was happening yesterday, and once those came out, the market sharply sold off. That's probably not the only reason it sold off, but it was coincided with those rumors coming out. So have to keep our eye on that situation. The soybean meal basis has gone down in the eastern Midwest, not by much though. I think it's still 65 over in the eastern Midwest, so it came down around $5. Not just a huge drop in that basis. We'll have to see if that squeeze continues to go on. One thing I want to point out right here that was brought to my attention that was interesting, this market right now feels a lot like it did in the spring. The fundamentals were pointing that we should be trading lower, that we were way overpriced based on what was going to go into the ground, and the outlook for the growing season, and the fact that we haven't had several drought years in a row weighing on the fundamentals of the grain market yet. Excuse me, the market shot higher, and it was based on funds pumping money into the market. Well, that's kind of what it feels like right now. The fundamentals are pointing that we should be much lower, basically should be where price levels we were at in early October, yet we're way above that right now in corn, soybeans, and wheat, and that's likely due to funds pumping money into the grain markets. The corn market had a huge volume spike tomorrow. I think it was where it was the highest we've seen in about a decade as far as the number of contracts traded throughout the corn market. So huge volume for this time of the year, or any time of the year really. And that shows us the funds are piling into some long positions. So we'll have to see how it plays out. Granted, the short squeeze in the soybean meal market is probably one of the reasons that they're pumping money into the markets right now and getting long these positions. So we'll have to see how it compares to the spring where it rose up. Then that June 30th report came out, and boom, fundamentals were realized, market sold off. We don't have another USDA report until January, so we'll have to see how it kind of plays out between now and then. But interesting to note, it feels a lot like the spring when the fundamentals were overrode by money flow. We'll have to see if the fundamentals can get back on track and trade the market where realistically, based on simple supply and demand factors, it should be trading. So that's all we've got for today. There's no export sales report released today. Veterans Day was on Tuesday. Government was shut down. Therefore, we'll get it's pushed back everything a day. So we'll get the export sales report released tomorrow, and we'll go over that for you then. So if you've got any questions, let me know. Otherwise, have a great day, and we'll see you tomorrow.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by Daniels Ag Services, broker, who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.